Hey everyone, Coach Investor back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So we have some good news for Tesla's long-term investors and some bad news with regards to Tesla stock. Now, if you're following the price action, you know that this is the third week that Tesla stock is down. We're going to look at the graph at the end of this video. And so, if you follow me on X, you know that at the start of August, I predicted that if Tesla stock drops another 10% or so, we'll start hearing the same complaints by the so-called money managers about Tesla, how they're not doing their jobs, how price cuts will not work, etc., etc. And so we're going to talk about the price cuts in this video as well, the strange new limitation that is software limited when it comes to battery range, which could in the future unlock future revenue streams, but currently it doesn't seem that way, but it's a bit strange. We're going to have a look at the China numbers as well, and then of course Cybertruck. But first, Tesla and Apple are the most under-owned companies right now according to Jefferies. So as you can see here, the top 20 under-owned companies by global hedge funds, Tesla number 1, number 2 is Apple. I mean, pretty surprising when you look at that list, won't you say? Now, you could see this as something bearish, you could see this as something bullish. Maybe, I don't know, if the price drops low enough, this hedge fund will start loading up on the stock, and then suddenly, before you know it, we're back at $300. I don't know, remains to be seen. Now, with regards to the most over-owned company, there is Alphabet number 1, Meta number 2. It's crazy how sentiment has changed, right? At the start of this year, you would probably never think that these two would be the top 2 positions there. Then you have Broadcom, United Health, Netflix to finish up the top 5. Oh, and this is sorted by active weight, by the way. If you want to know sorted by net exposure, then it's Microsoft, Meta, Nvidia, Amazon, Activision Blizzard, and Netflix. Now, jumping straight to the China weekly insured number, that number came in at 14,000 for the week of August 7 until August 13. And as you can see, we have caught up with that record Q2 quarter despite a slow start. Now, if we compare this to the other German car maker companies in China, you can see that Tesla surpassed the sales of Mercedes, BMW, and Audi in China last week. German car companies were trending down in August and Tesla was trending up. Again, great charts by Piloli following on X. Then, according to Bloomberg, Tesla revamped Model 3 mass output in China may start next month. The updated model, set to have sleeker exterior, interior design, display cars, may be sent to showrooms later in August after months and months of rumors and potential leaks, etc., from the Project Highland. Finally, we might actually see something material and maybe even official. Now, when it comes to Tesla's price cuts in China, they cut the Model S and X prices by over 6%. And they did the same for the Model Y long-range version and the Performance as well. I don't know, the Model Y long-range and Performance in China don't really make that much of the overall mix. But of course, when the headlines go out and you see price cuts, it's automatically negative. We've spoken about this time and time again. Elon said it time and time again. We are driving the prices down so that volume can go up, so that the adoption of EV can go up as well. And eventually, if they want, they'll make it back through software sales. Of course, remains to be seen how many actually buy FSD. But hey, if they're ramping up, if they're cutting costs, then maybe, yes, they can lower prices without hurting margins so much. Of course, we've seen that margins have been hurt a little bit before, but currently in the high interest rate environment, I mean, it is the logical thing to do. Right now, yes, you could advertise, but if it's super expensive to buy cars right now, if it's super expensive to finance the car right now, then advertising won't really help much. What will help much is lowering the prices. And so, in North America, we suddenly see here that Tesla has launched an all-new standard range Model S and Model X. Both are $10,000 less than the long-range Model S and X. Now, with those two models, we know that the margins there are better as well. So taking a cut here, it might hurt the margins as well. But again, S and X compared to 3 and Y, right? The amount, the output and the amount of sales there is pretty small, all things considered. But there is even more news, because apparently Tesla confirms that the new standard range Model S and X are limited by software. And here is the interesting thing. So Tesla has confirmed that its newly launched standard range version of the S and X are limited by software and do not equip different battery chemistries like lithium iron phosphate or LFP. This was confirmed by Teslarati. They called 3 Tesla showrooms to confirm, and they were all given the same answer. The vehicle are not using any different battery chemistry and are limited by software. Additionally, Tesla has no plans to currently offer upgrades that would unlock more range in the future. Tesla's strategy of offering the Model S and X at these lower price points could help take stress off the Model 3 and Model Y, which make up over 90% of the company's vehicle mix regularly. Now, going back to the interesting point here, additionally, Tesla has no plans to currently offer upgrades that would unlock more range in the future. I find this very hard to believe because, first of all, selling these vehicles, right, making the same vehicle over and over again without the minor adjustments is pretty good for manufacturing, right? You don't have to make the changes, you just produce the same car over and over again. The only thing that's different here is the software, right? It doesn't give you the same range as the other model, which means that you can produce cars at a lower cost, and then maybe in the future, if the buyer wants, it can upgrade that range. Maybe on a monthly basis, who knows, right? Let's say you only buy this car because you need it to go to work. But maybe during the summer you like to do a road trip and so you would like to have more range. Maybe there will be an offer to pay a monthly fee to get more range, to get that unlocked. Currently they say they're not going to offer that. But hey, in my opinion, why not, right? Why not offer software services? I mean, it is a no-brainer. I mean, they're already doing this with FSDs, so why not do this for range as well? Remains to be seen what happens there. Now, before I continue, if you enjoy this type of videos, I would appreciate it if you hit that thumbs up button and subscribe if you have not. Helps a lot with this channel's growth. We're on our way to reach 30,000 subscribers by the end of the year. So thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, when it comes to the Cybertruck, first of all, we've seen every day more and more pictures, videos of Cybertrucks in the wild. It's pretty amazing. So apparently here, according to an article from Finbold, they estimate that Tesla receives over 1,000 Cybertruck orders a day. Do you think this is believable? Do you think not? I mean, it's pretty amazing. And to be honest, when we'll see the actual Cybertruck release, the event, I think it will break the internet completely. Whenever that will be, I don't know. They said Q3, so hopefully in the next coming weeks we'll actually hear something. Now, last thing, this was all the great parts for Tesla long-term shareholders, right? I mean, short-term, yes, expect some pain when it comes to margin, but don't forget that the energy side of the business is ramping up quite fast. Remember, we've had a huge backlog there, and we've seen the margin jump last quarter. So I do think that the energy side of the business will start to contribute meaningfully to the overall business. Of course, still small compared to the automotive part of the business, but at current growth rates, I mean, they'll catch up pretty fast. Now, let's call it the bad news for the stock, right? Stock gets down because of the negative headlines, la 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 la. Now, if we look at the stock currently, negatively speaking, it's not that great. We're closing the week under the 200-day moving average. We're still in this so-called cup and handle pattern pretty nicely. Hopefully next week we see a little rebound. I mean, it's pretty funny if you don't really believe in charts, but yes, $200 does seem like a support line. I know round numbers are pretty crazy, right? But it's always like this: $10, $100, $200. Round numbers seem to be some type of support or resistance line. So we've had resistance at $200 already earlier this year. Previously in 2021, it was a support line. Let's see if this time we can use that as well. Maybe next week we're finally going to have a little relief in the market. So you might see a green candle, because it's very rare that we get 4 straight red weeks when it comes to Tesla stock. Overall, on the weekly, we're pretty neutral. RSI, MACD is now turning bearish. On the daily, we are now officially oversold. So I know some of you have asked me, what do I think about the price action with Tesla? Is it good time? Is it a bad time? To be honest, whenever I see a lot of weakness in the stock, like we've seen in the last couple of weeks, I think for the long term, it's always a no-brainer. For me, I still have a pretty low cost on my share. I think it's around $106 or so. So I don't mind waiting a little bit more, or if I have cash available, I will add, because I've been adding to dividend portfolio. I've been adding to some other positions as well, as you've seen on this channel, a bit to Robinhood, a bit on HIMS as well, short-term trades, which eventually should turn into some good profits that I will reinvest into the main portfolio. But of course, do share your thoughts down in the comments below. What have you been doing with Tesla? Do you think this is good? Bad news? What do you think about the software unlocking or not unlocking? Let me know down in the comments below. If you enjoy this type of videos, leave a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.